my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. As is usual at this time of year, I stop looking at my daily charts and instead concentrate on the longer term view, using my weekly, monthly, even yearly charts. If you'd like to discuss any of these, I'd only be too happy to hear from you. So let me now introduce today's longer term chart.
Today I'll be looking longer term at LME 3-month copper. I've noted here in my commentaries for the last few years, especially last year, how we only had a few singular monthly closes over the important February 2011 high at 10,190, and very few monthly closes over perhaps the more important congestion between 9,900 down to 9,770. This past year in 2024, we have, over April to June, tested and breached the 10,190 overhead resistance, but we've still not closed over it, ending up with a 3-month duration pattern, a bearish evening star pattern, which had a suitable follow-through lower all the way down to the support afforded by the green 2-year moving average, which is currently at 89.18. Interestingly, the market then formed a small 3-month bullish morning doji star pattern, based on the combination of the green 2-year moving average as well as the mauve 3-year moving average, which is currently at 88.40. The follow-on higher from this pattern unsurprisingly halted at the same February 2011 high at 10,190 and saw prices turn back around and head down to where we are, testing the mauve 3-year moving average and the green 2-year moving average. I'd also like to throw in there the 50% Fibonacci line of the big 2022 to 2024 move at 90.28, which has, I'm sure, added its own impact to the recent moves lower. Altogether, the action over 2024 has formed a lopsided double top pattern, with the neckline for the pattern based on a closing basis roughly, and it's on a closing basis, roughly at the mauve 3-year moving average, which is currently 88.40. We haven't as yet broken the neckline, but I can give an idea of some, how should I put it, potentials, I think. I'll give an idea of some potentials just in case this break lower happens or should happen. Thus, a primary potential will be down in the 80.25 zone, with a secondary, much harder potential down in the 75.55 zone. So what do we have in the way to stop or at least slow any such descent should it happen? Well, the most obvious one is the dark blue lower time of the 2022 to 2023 bullish shift pitchfork. That's currently 87.08. This is not a perfect bullish pitchfork, as the upper time was pierced in early 2024 and there was no close over it. And currently it is at 10.959. I think that's where the pitchfork is. And though dented, I think it's still secure as a pattern. Additionally, below this lower time, there is the gold highlighted 5-year moving average, currently 84.78. Even further down is the 50% Fibonacci line of the 2015 to 2024 move at 77.09. Meanwhile, looking topside, just keep an eye on the dark blue middle time, currently at 98.32. This proved to be good resistance as recently as November 2024.
Thank you for watching and listening. This annual broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.